Here with the Mike Martin channel. Thanks for joining me on the housing crisis. Been covering it for many years now. Not a bandwagoner here to stay. Delusional Mike comes once in a while to give you prices abroad. Anyways, guys, what's happening? If you're living down in Australia, you better put your ear to the ground on this one, because this one, you're gonna feel this one coming like a train, a runaway train. Housing correction we have to have. This is from today's date in Australia, down under. The report's finding prices will fall and rental yields rise is correct, but it won't be as severe as predicted. I don't know about that. Prices will fall. That's no brainer, but I don't agree with the magnitude of this report. Yeah, it's going to go down 40-50%. I've been estimating this. I was so off on my estimations. I'll leave a link below. It's going to be on the top right. You're going to see it's going to be called a housing documentary that I'm putting together, trailer. Look at my predictions from 2015. I was off by a couple of years because I wasn't factoring in money laundering, because I would think your government will protect you from money laundering like they didn't in Canada. They didn't protect us either from money laundering and these corporate shells and all this crap, and then this mass exodus of people leaving their cities. And now who's going to flip the bill for the private sector jobs? Who's going to pay for your doctors? They're just going to raise taxes and property taxes. So we could scrap that. That could go to hell. Let's go here. This one here. Macro business. Aussie bond boom goes nuclear. Don't say we didn't warn you. Following the dovish Fed last night, the Aussie bond boom is now shooting out of the atmosphere. And I think gold is going to be like that too, honestly. Next stop, record low yields across the curve as the RBA is forced to cut runaway markets. Despite the boom, there has been no curve steepening all along. At all, sorry. Again, illustrating now far behind the curve, RBA, the short end is now more inverted than any time since the China bust, and long has not lifted at all. Yield spreads to the U.S. remain close. Records given to the Feds is now priced to the RBA cuts are not. There are more records ahead to break. So this is it, guys. U.S. yield spreads. The assuming part is that there are still no rate cuts priced. So here it is. You keep lowering interest rates, the bond market's going to somewhat start to take a dive, and you're going to see gold. Gold is supposed to rally because gold is so heavily manipulated. It's kind of not working out too well. Remember when they started raising rates and the bond market started to look nice and everything started to look like it was back in line? But that's not happening. They should leave these markets on autopilot and adjust rates accordingly, not stimulate, not cue quantitative easings. The assuming part is that there is still no rate cuts priced. That's how badly the lunatic RBA has destroyed this market. My views remain that the bank will be forced to cut 4 times over the next year, which will mean a 10-year yield at 1%. If that. It's going to be a 0.5. But you know what, guys? I'm going to throw this out there real quick. And I've said this before, in a bathroom in the hospital, when I had to make this video so urgently for you guys. I had some downtime. I was looking at Australia, looking at numbers, looking at what's going on. And and from my little experience and understanding what's going on in the markets, if Australia went to 0% interest rates, they can't get out of this. No matter how much they cut back rates anymore, if they went to 0%, their person to debt ratio per person is phenomenal. The household debt ratio is phenomenal. Government spending, but household debt ratio, and now with them, looking at cutting rates even more, it's going to make it even worse. They could put rates to zero. It still won't save Australia. That's how bad it is. All right, let's go to the next one. Weekend auctions preview. So, given the insane focus on Australia's housing markets and the moments and in light of our recent commentary around the best way to interpret auction market results, see here. We are still putting out shorts previews each Friday of summary updates and the following Monday. Okay, here goes. Key points. So last week, March 16 through 17, final unadjusted clearance sales 52%, Melbourne 52.1%, 54 and 52. Slippage between primary and final sales 8.9 points, 1.6 points. Withdrawal sales 15.3%, Melbourne 4.5. Why are you seeing so much withdrawal sales? It's because people can't secure the financing anymore with the stress test. Estimated seasonal adjusted clearance in Sydney 52.2%, Melbourne 49.8%. Estimated withdrawal adjusted clearance rates Sydney 51%, Melbourne 48.1%. This weekend, March 22nd and 24th, based on historical averages. Assume slippage between primarily, and final estimate Sydney down 5.5 points, Melbourne 1.5 points. Seasonally adjusted Sydney 2 percentage points, and Melbourne 2.3 percentage points. Withdrawal rate adjustment Sydney 14%, Melbourne 3%. Also note that the New South Wales state election to be held on March 23rd is likely to see significant lower auction market activity this weekend. All figures based on primarily and final auction results provided by CoreLogic. Okay, guys, story time with Mike Martins. Okay, so this is what's going to start happening like it was back in the day. The family would take the car, go around and see homes that are potentially for sale, go look at the house. Hey, there's no auction on this. Let's go ahead and call the real estate agent, put in an offer. The house is selling for $420. Let's put an offer in for $4. Owner comes back, says wants $410. You say $4 or a walk. Owner says fine, I'll sell it for $4. Pending appraisal, pending inspection, pending environmental inspection, pending financing. So before that goes off, so that's what's going to be happening soon come Australia in the next year. There's going to be no more auctions. Nobody cares. People are going to go there and they're going to look at homes. There's going to be no lineup of people to buy, no lineup of people to put a deposit on pre-builds anymore. You're going to go there, you're going to scratch your head and say, how much do you want for this, sir? I want $720. I'll give you $6. No, bye. You just keep doing the buy thing. Just keep doing the buy thing. And don't worry, because there's an oversupply of glut on the market. You guys have no ideas how big the oversupply is. And I did a video on I even predicted this 2 years ago. You're going to see an oversupply of unfinished condos on the market. Because when I lived in Florida in 2007, everybody was running away from the markets back then. And there was a huge oversupply. And a lot of people that put down $5,000 on the pre-builds, they ran away. But the people that put 50% down were screwed. Anyways, let me know what you guys think in the comments below if you live in Down Under. Guys, don't forget to join me Wednesday nights for Trends in the Housing Market, where we cover all English-speaking worlds. Trends in the housing market's been going on for 2 solid years straight. Add me on Skype, Mike Martins 1980, if you want to be on the show. I'd love to have you and hear your side of the story if you're anywhere in the Commonwealth. Thanks for watching. God bless. Big hug to everybody.